Good morning, and thank you for tuning in to your Home and Finance Show. I'm Janis Bradley, broker owner of JB Real Estate Consultants, and joining me is my co-host,
Diana Rice-Wilkerson, lender with Fairway Independent Mortgage.
We are your seasoned, trusted advisors, committed to personally navigating you through the home buying and home lending process. This show is designed to provide you with current and relevant information about different aspects of home buying, home selling, and lending so that you are knowledgeable when making decisions for you and your family. You can also hear us on Saturdays at Praise AM 1310 95.1. That said, if you are in the market to build, buy, or refinance, we'd love to represent you. You may reach us at the contact information below. Now, Diana, on with the show. And Diana, I'm going to put you in charge now because I think you have a very important person that you would like to introduce.
Well, yes, absolutely. And first of all, let's just say, hey, Happy New Year. And we're happy to kick off 2024 with this fantastic show. And our guest today is Beverly Wright, who is with UQUAL. And UQUAL is a company that helps you get prepared for qualifying for a mortgage. So they work a lot with folks who have credit challenges, and whether that is just a small challenge or a large challenge, they can help you. So we are excited to have Beverly joining us today.
I'm doing great. How are you ladies today? Thank you so much for having me. I'm really excited to share some credit wisdom with everyone, just to help you get ready for home ownership or refinance or whatever it is you're trying to do.
That's an everyday thing we like to hear. Yes, helping you. That's right, to get refinance or buying a home. And we love the name of your business. Would you let the the listening audience know the name of your business? I happened to ask just simply because I didn't know what it meant. UQUAL. But I think the listening audience would like to hear that, what that means.
Well, UQUAL is basically short for You Qualify. So we are a loan readiness company, and our goal is to help get your credit situated into a position that you can actually qualify for whatever it is that you're trying to do. So whether it's credit score related, whether there's some errors or derogatory negative items on your credit history, we want to look at those. We want to look at your debt to income ratio because that's very important when you're trying to qualify. The better your debt to income ratio is, the more purchasing power you have. And we need all the purchasing power we can get right now in this market. And then we have budgeting tools available for you as well. So it's just a full service, well-rounded program to just help get you set up and ready to go.
And that's what I love about your company because it's unique. It's the only one that I'm aware of that offers this type of credit assistance. So you're focused on getting your clients ready for a loan. It's just laser focused on that. And I love the fact that you're familiar with debt ratios and things of that nature. And Beverly, also viewers, used to work at Fairway, and so she is definitely familiar with how we work, and her commitment to you is beyond just that of a credit professional. She's about getting you ready for that loan, so we love that. Bev, one of the questions I think that a lot of folks have out there about credit is just why is their score different than when we give a score out, it's oftentimes we're pulling from the FICO bureaus that you're familiar with, and yet they're being notified on a pretty regular basis, whether that's through a site that they have signed up for, or maybe credit cards or bank statements or whatever. They're being notified about what their credit score is as well. And so when we provide the score that we've pulled, oftentimes it's different. Why is that? And can you help our viewing audience understand that piece?
Right. Well, there's a misconception out there with the word FICO. Everybody thinks it's just one scoring module. And there's many different scoring modules for FICO. The ones that you see, the consumer-based ones that you might get through your bank or through some of the other credit monitoring companies that you might be joined with, they use what's called a Vantage score. And so Vantage scores are set up completely different. They don't take into consideration a lot of different factors that the mortgage FICO scores look at. Mortgage is a higher risk.
Okay.
So the because of that, the algorithm is more strict. When you're using the Vantage scoring or the consumer ones, those are for auto loans, those are for credit card applications and things like that. And they don't take into consideration things like anything that's late over 2 years old. The mortgage looks at a 7-year payment history. So that's huge right there, and that can change those scoring algorithms. So a lot of times those consumer ones will look higher because they're not taking everything into consideration like the mortgage scores are.
You know, I have to share with you, that is the first time I actually heard that.
Okay.
One of the reasons why they use FICO is because of a higher risk. Yeah, I mean, and that makes sense. And I think an individual, just everyday person will say, oh, okay, now I understand, because you're right. 9 times out of 10 is usually for cars or something like that, or you know, whatever. But this, I think a house is really a big deal.
It's a really big deal. And in addition to that, I mean, talk about the different versions of FICO even. Can't that be a little confusing also?
Oh, wow.
Yeah, I don't even know how many versions there are. There's probably 16, 18, I'm not sure. In the mortgage industry, we use 3 different ones. Each bureau uses a different one. There's the 2, the 4, and the 5 in the mortgage world. Okay. And those are all kind of calculated a little bit differently with Experian, TransUnion, and Equifax.
Is there a site, do you know of a site, if a consumer's preparing to buy a house and they're wanting to really kind of have access to the scores that we have access to, is there any site out there that they can maybe go to for that kind of help? Maybe to just make sure that their scores are going to be more in alignment with the ones we pull?
The only one that I know of that's the most accurate for the mortgage industry is probably MyFICO. But they do charge a fee. They have anywhere from $20 to $49, I think. But what I usually recommend, more than just looking at your score, take a look at what's going on with your credit. You can go to annualcreditreport.com. That's annualcreditreport.com, and you can pull any of the 3 credit bureaus for free. You just have to create a profile in there, and you can pull that, and you can take a look and see, is there anything negative reporting on my credit that I didn't know about? You know, you already should know what your credit card balances are. If they're too high, they probably need to be lowered. But that's what's really nice about annualcreditreport.com. Now, you can get a score if you pay a couple of bucks for it, but I don't think it's going to be the same one that we use. Right. But in my professional opinion is, you know, if you're monitoring and paying attention to your credit, then that's when it gives you the knowledge to know what's happening so that you can get it addressed if there's an issue. So that's what I recommend to go to. But as far as getting an accurate credit score for mortgage, that's probably the only one that I know of.
So what age do you think a person needs to start checking their credit, or is it a time frame when they think they're thinking about buying a home? And how often should one check their credit?
Well, what's nice about annualcreditreport.com is you can check any of the 3 bureaus once a year. They did change it for a while when COVID was happening. They would let you go in once a week. But if you look, like maybe every quarter, just take a look. Okay, this quarter I'm going to look at Experian, and then this summer I'm going to look at TransUnion, and then around Christmas or November, maybe I'll look at Equifax. And so you'll just want to look at all 3 of those just periodically throughout the year, I think is a good way to go. I would stay away from some of those companies like the Credit Karmas of the world and some of those. And the main reason I think that you know, they do have some valuable information, but the one thing that I don't like about it is they're selling your information, and they only care about getting you to apply for loans and credit cards and home loans through their website because that's how they get paid. And so I just feel like you need to stay away from those kinds of places because Credit Karma may tell you, hey, you could use a new credit card to really improve your credit score. Well, no, Mr. Credit Karma, I already have 8 credit cards. A new credit card, new trade lines count for 15% of your credit score. So if you open a couple of credit cards in rapid succession, your score will actually drop. And a lot of people don't know that. So I kind of opt for staying away from those kind of places for many reasons, and those are some of them.
Bev, what components go into creating a credit score?
Oh, that's a great question. So a mixture of credit is fine. If you have a couple of credit cards, if you have an auto loan, if you have a home loan, if you have student loans, a mixture of credit is fine. The most important thing is to just make sure that whatever you have, that you pay it on time. That's the main thing that you need to do. On-time payments count for 35% of your credit score. So one late payment, you're probably get a 40-50 point drop just by that. So I always recommend to make sure you're really paying attention. And sometimes it's a capital one $25 payment, and you missed it. Figure out a way, budget yourself, figure something out, to make sure that you are monitoring that and paying attention to your payments.
I set up for myself because years ago, there was not all of this automation. So you had to write a check out and put it in the mail and make sure it got there on time. And so I struggled with that. Even though I was in banking, I struggled with it. So I set up bill pay. So it's at least a minimum payment is automatically paid, and I can always pay extra. But back to that $25 payment, and I see this so often where a person has been late on a credit card. Well, the limit's only $300. So the payment could not have been much. And it's probably just an oversight. For most people, it was just an oversight. But even once you pay it current, it does not restore those 40, 50 points that you just referred to.
If it's late and it's on your credit and you've made the payment, that's fine that you made the payment, but that late will sit there on your credit for 7 years. That's how much of an impact it has. Honestly, I think our credit system probably needs to be revamped. I don't think it's very accurate of a person's ability to be able to repay, but it is what it is right now. So we just have to play the game that they have set up. If we play by their rules, we'll be fine. So, it's unfortunate that you get that big of a hit for something like that.
So Beverly, take us through a situation that it is an incorrect whatever has hit the credit report. So how would that person take care of that? Or is that something your company would help do?
Yes. So one of the things, sometimes it's very difficult to get items removed from your credit history. As a borrower, you have to make a lot of phone calls. You have to have a lot of arguments. You have to write letters. You have to go to the credit bureaus. And it can be very, very frustrating to get negative items removed from your credit history, especially if it's an error on their part.
Right.
Sometimes you're fighting City Hall, basically. So our program is so great because we have an automated system. When you enroll in our program, you will get set up with a portal where you can go in and you can click on any item that you disagree with on that portal, and it will go directly to the credit bureaus. So you don't have to hassle with phone calls. You don't have to hassle with any of that. And so what happens is our team sends out the disputes and gets working on those. So behind the scenes, the derogatory items are in process. They're working. Okay. You don't have to focus on that. You don't have to worry about that. What you can do from there is focus on the items that we might recommend that you do. Maybe you need to pay some balances down. Maybe you need to open up a new card. Maybe, get added or removed as an authorized user on a card, lots of different things. But that's really the best way to get rid of negative items, because you are going to spin your wheels and you're going to spend a lot of time, and that's very unfortunate to have to do that.
So do I hear you saying that every negative that's on your credit report is on there for 7 years, no matter what it is?
Yes. If it's a bankruptcy, Chapter 7, it's on there for 10 years.
Okay.
So congratulations. If you can avoid bankruptcy at all costs, I recommend just find another way. Work with your creditors if you need to. We can help you, with some things too if you have some lates and things. But yeah, it's a long time. That's a long time, honestly.
But my understanding too with lates is the more recent the late, the more impact it has on the score. And the older the late becomes, the less impact it has on the score. Have you seen that to be true?
Probably not, only because that's a negative item on there. It's a thing. It's already there. It's it's carved. It's like a tattoo. It's on there.
Okay.
Got
Alrighty.
you. Got
so
you.
this Experian boost that we see on TV, share with us about that. Does that really work? Because I'm telling you, they have all kind of commercials.
Experian boost. So,
One of your favorite questions, huh?
Don't bother, because it has zero impact on your mortgage scores. Now, it might help with your Vantage scores if you're trying to get an auto loan or something like that, but it doesn't really do that much. The thing that I don't like about it is because it's not really creating that much of a positive impact on your credit, why bother? But if you have some late payments and they send you to collections or something happens, now you've got issues. So I personally say just stay away from Experian Boost. It's really a waste of your time. And you don't need one more thing on your credit that could have a negative impact if you ever had a situation. So yeah, it doesn't really help for mortgage mostly.
And talk to us about medical collections. I know in the last maybe year or two, there were some changes. Prior to that, a medical collection got treated like any other negative item once paid. Can you chat with us about that, please?
Yes, so great strides in the, FICO mortgage world for medical. So if you have a medical collection on your credit report, if you pay it, or if you can negotiate a settlement with them as well, the minute that medical company or collection company reports as a zero balance to your credit history, it's deleted. If you have a $500 or more credit, they can't report that for a year. Okay. So my suggestion, and the thing with medical is really frustrating because you have medical insurance, right? And so you think your medical insurance company took care of it. Most of the time, these things pop up on our credit and we don't even know about it. And that's against the rules. You cannot post something to someone's credit history if they don't know about it. You have to contact them. You have to reach out to them. If you have an old address or you've a wrong phone number, you cannot put those kinds of things on someone's credit. But I love that medical, your medical situation is not indicative of your ability to be able to qualify for a home loan. Your credit cards, your auto loans, the things that you've signed up for and that you're doing, yes, those show your responsibility. But anybody can have a medical situation, and 5 minutes in the hospital is going to be very, very expensive, and it's very difficult. So they finally took that out of the equation. So if you do have medical situations on your credit, just reach out to that collection company and try to work with them and see if you can negotiate some kind of settlement, and they'll remove it. And that'll be really helpful. When you get rid of that, we've seen some great score increases just based on those things.
And what's so interesting about the medical collections is that you could have had surgery or whatever for this date, and then it doesn't show up until the next year or following. So that just really throws you off a little bit. Yeah, that's have mercy is what that called.
If you had to go to the hospital or the doctor's office several times and you get bills from everybody, and you don't know who's who half the time, it's very frustrating because they have to wait a whole year before they can report that stuff to your credit history. So you find out about it down the road and you're like, what's that? Where'd that come from?
And medical debt is a choice, not a choice, sorry. Medical debt is not a choice, where some of the other debt that we go into is a choice. We've made a decision that we're going to open up a credit card or make a loan payment or whatever. Medical debt, not so much.
One question I want to ask you before we end. So what makes you qualified different from other services?
I think what makes us really different is just all the tools and resources we have available for our borrowers. So, we have a budgeting app in there that takes the place of like a Rocket Money type thing. Rocket Money just wants your loan. They are owned by Rocket Mortgage, and so they're going to sell your information out there. They're going to try to get your loan. They're going to try to steal your realtor. I mean, they're not there to really help you. Our platform that we have is like kind of like an ecosystem. It stays within us. There's no trigger leads. There's no selling your information. We don't do any of that. The budgeting app is so helpful because it shows people, it'll have little bubbles and it'll show you like one of the bubbles, it might be food and dining. If it's green, you're doing great. You're not overspending. If it turns yellow or if it turns red, you're overspending in certain areas. And people don't realize, like Uber Eats and maybe coffees, they've got their coffee addiction. They don't realize how much that adds up. We had a borrower who didn't realize she spent, in a 12-month period of time, she spent $7,000 at Starbucks. Like most people don't look at that. They look at their account.
In 12
and they
months.
Go, I got money.
In 12
they
months?
They don't add it up. Yeah. I mean, think about it, especially if there's two of you. Every day for you and your spouse, or you and your BFF at lunchtime, or whatever you're doing, it adds up so fast. And I always tell people, do you want a coffee or do you want a home? Do you want to go out to eat or do you want a home? Make your coffees at home for a while. Get some, Starbucks that you can make at home. Meal plan. Don't eat out. You can save so much money by just reprioritizing where it's going. Take that money that you would spend in those places and put them in a savings account and start saving for your down payment and start saving for your closing costs. That's where your money should be going, especially if you want a home. You can, once you close on your home, you can create a little budget for yourself if you want to treat yourself to a Starbucks or go out to eat. Absolutely. Don't deprive yourself of everything, but don't be excessive in some of those areas. And so that budgeting app is super helpful for that. Subscriptions that you might have, you might not even realize you have 2 Netflix accounts that you're paying for.
Now
that's true.
See, I could see myself with that. I don't have it. I don't have Netflix. I actually discontinued Netflix because I had several streaming accounts, to your point, and I only watched 2 or 3 of them, my favorites. And but at the same time, once something's set up on an automatic deduction for the payment, it's easy for you to allow that to keep going, especially if it's not major. But at the end of the year, it's adding up.
Exactly. And this is a true story. So one of the guys I work with, 8 years ago, he was going to go to Mexico, and he went to a tanning salon because he didn't want to get sunburned. He wanted to kind of build up, right?
Right.
Well, he didn't realize that they were charging him monthly. 8 years later, he found out that he's still paying this tanning salon thing through a credit card or something he had it set up with. He went there one time. And this is what happens. We don't know. We're not paying attention to what's happening. And so budgeting is huge. Paying attention to all of those kind of things is absolutely huge. So that's just one of the many things I think that makes us different, is being able to really help borrowers get a handle on their finances, get a handle on their credit situation. And that way, once you start getting into those habits, it's very exciting. When you start saving and putting money in your savings account, you're like, it's only $50. Okay, whatever. But all of a sudden, a few months down the road, you look and you're like, wow, I've got $400 in there. It gets, it's addicting, honestly. And it's very exciting to get there. And when you get it all together like that, and you get your keys released to you that day you're moving into your new home, I'm telling you, there is no better feeling in the world than that.
You can tell the smiles. You're right.
Yeah, whatever you have to deal with to get there, you are going to be so happy once you get to that point.
One of the things I'm working on, we just haven't got to it yet with our shows, but you know, Diana Googles every single thing. If we're even talking about something very simple, she has Googled it. But anyway, make a long story short, we're talking about building wealth, et cetera, et cetera. So I haven't read through all of it, but one of the things that I did pull up was talking about spending triggers. And I can't wait to go all the way through that because we know we all have them. So I think that's gonna, you know, have a listening audience saying, oh my God, that's me. And because I can remember a stress might being a more of a stress eater, which meant you bought something, or stress shopper. But that has stopped. But I'm just saying that was just who I was. And real quick before we end, I was just telling Diana when we were talking about Starbucks, and I love Starbucks, but I even find that, you know, now if I drink it, it's just a lot of caffeine. But where I live, there's a Starbucks here, and there's a Dunkin' Donuts on the other side. And I wonder, I have no idea the difference in the price, but there's got to be, I'm going to find out. Let's just say that, I'm going to find out. But it would be really just kind of surprising or just something to know about those who decided, I think I can live with Dunkin' Donuts right across the street. I mean, we're talking right across the street. But, you know, that can make a difference. I mean, that can really make a difference, especially if you have to stop for coffee every single day, you know, on your way to work. That, you know, I'm just letting everybody know, don't do without your coffee. You know, just go to the other place.
We definitely don't want you to do without your coffee. We have just a few seconds left, Bev, and if you could please tell our viewing audience how to connect with you through me if they have an interest in maybe participating in the program, in just a few seconds.
It's best to just reach out to Diana. Even if you already know that you have credit issues, you know, that's okay. You can still get the process started. She will reach out to me. She will give us your contact information. We have an incredible credit team that will reach out to you. They will do a free consultation with you. There's no obligation for it, but they'll chat with you. They'll explain the program. What are the benefits? How much is it? Right now we have very special pricing with Fairway. It's a $69 enrollment fee, and then it's $89 every month. And it's month to month. You stay in the program as long as you want. You can take advantage of the services that we have for as long as you want to. What happens with some people is they enroll in the program and maybe they just need to get to a 620 to buy the home, right? So they close on their loan and they say, thank you very much, goodbye. And we say, congratulations, we're so happy. Thank you for letting us be part of your journey. And they move on. But we know, and we're praying, that these rates start going down, you know, through the course of this year. It's projected that they'll probably go down after July again. So that's kind of what I'm hearing.
Yes. So we are a little bit out of time. So I think the key there, like you said, to the viewers, if you have an interest in this program, and it is an excellent program, viewers, please connect with me and I will get you connected with Bev.
Sounds good. Thank you so much, Beverly.
And viewers, thank you so much for tuning in today. We look forward to seeing you next time. Bye-bye.